Hi guys, welcome to the 8th session of FinBites presented to you by FinWiz. This video is in sponsorship with Trade Manza, the Millennials Guide to Stock Market. Check out Trade Manza, link in description. Quick disclaimer before we proceed any further. FinWiz is not a SEBI registered financial advisor. Any information provided in whatsoever fashion is for the general sake of education and should not be taken as a financial advice or investment idea. Here's what we're going to cover today. We're going to start with the basic overview of fundamental analysis, see what the components of financial statements are, and then one by one understand these three financial statements very briefly. So that's the income statement, the balance sheet, and the cash flow statement. Finally, we'll try to see how we can fetch these statements online and perform fundamental analysis for any given company. So we already kind of have an intuition of what fundamental analysis is. Fundamental analysis essentially means trying to analyze the company from its books and see whether or not it's a good investment asset as of today. So the steps involved in fundamental analysis are usually starting with the macroeconomic analysis. You try to factor in any economic policies and government regulations that can change the company's performance or might change the company's performance. And then you go into the industry to which the company is specific to. You try to see how the growth of industry has been, if there's any cyclicity involved, if there's any change in demand supply scenario, all of it is done. Then you go into situational analysis, wherein you're trying to see how the company is expected to perform in the coming period of time. So you would have projections of how the company could perform in a couple of quarters from now, or something like that. You would have a best case scenario, worst case scenario, and see whether or not the company is going to perform good there. Finally, in financial analysis, you're trying to see how the company is has performed over the previous period, previous period, and whether or not it's a good financial investment as of today. So, what is the goal of fundamental analysis? The essential goal of fundamental analysis is to study the books of the company and finally give the company a price value, an intrinsic value that you think the company is worth, right? So that value usually consists of a market price and also takes into consideration a logical growth that the company can make in the coming future. Often this intrinsic value also gets a premium from the market, which is usually reflected in the stock price at which the company lists. The price momentum can take it to overpriced levels very easily. So of course, if there's a value and there's a price, there's going to be some drivers that can change both the value and the price. Because the value of the company is intrinsic to the company, anything that's intrinsic to the company can drive the value up or down. So if there's a cash flow from existing assets of the company, if there's any growth in the cash flow and a change in the quality of growth, all of that can drive the intrinsic value of the company up or down. Similarly, the price of the company, which is usually determined by the market, can be driven by market moods and sentiments and any stories about the company's fundamentals or stuff like that. Often there exists a gap between the company's intrinsic value and price, and as a fundamental analyst, you're trying to spot the gap, see if there's a gap and if it will close. And if it does close eventually, does it close because the value is going forward, or is the price declining, or is there some other reason? The drivers of this gap usually are any information related to the company that might be public in the coming time. Let's say a negative news about the company. If you guys must have followed Tesla, it's been increasing a lot in price since the previous couple of months. There's also stuff from corporate governance and liquidity. So if the company's management board makes some decisions related to the company, all of that can drive the price, the gap. So how do you perform fundamental analysis? When you're doing fundamental analysis and analyzing financial statements, you're trying to look into the balance sheet, the cash flow statement, and the income statement to get a very nice overview of what the company has been doing and how it's been performing over the previous quarters. So we'll be going into all the three of these one by one. We'll be starting with an income statement. Like the name suggests, an income statement tells you about the income of the company, and you can see it's mostly done by reducing all the expenses from the income generated to get the net profits usually. So an income statement shows the profit and loss of a company that's been done over time. This is usually determined by taking in all the revenues and then subtracting any expenses that the company could possibly bear out of operational or non-operational activities. The way to do it is usually by taking into consideration all the revenues, subtracting any costs involved in manufacturing or providing the service that the company sells, getting a gross profit, removing any administrative and selling expenses if there are, removing any other expenses and taxes to finally get to the net profit or net loss depending on how the company has performed. This is what the income statement usually looks like. It starts with revenues, you remove any direct operational costs, and then you get gross profit. From the gross profit, you're trying to remove all the indirect costs that are that the company has been bearing in any way to get operational income. And the difference between operational income and net income is usually the taxes that you pay and any additional money that you would otherwise have to pay if you're raising money from banks, from loans or mortgages or something like that. This is what a sample income statement looks like. Starts with revenues, removes all the costs one by one to get finally to net income. The costs are usually stuff like COGS, advertisement costs, rents, taxes, salaries, wages, supplies, travel and entertainment costs, etc. There's also depreciation. Depreciation is the uh, the price of assets declining over time. So if you got on a machinery in your company, its value is going to decline over time, right? And you take into consideration that depreciation. The next thing that we need to know is a cash flow statement. So why cash flow statement? So here's what a cash flow cycle looks like. When you have an operational cycle, in the beginning of the cycle, you have some money with you. You purchase some raw materials, you produce your goods, and then finish them off. After you have done with that, you send it away to your sales channels, let's say wholesalers and retailers and all of it. They sell the company's products, and then you realize some income. So let's say the entire cycle takes about 2 months of time, right? Let's say a purchase takes 5 days or so. You produce the goods in 1 month and refine them, give the finished goods in, let's say, 1 month, and then this thing takes another 25 days or so. So in this entire 60-day cycle, you can see that the company is making money or getting money into its bank account, that is realizing its income in every 60 days. But what about the 60 days during which the company was operating? You need cash for that as well. And efficient management of cash is thus very essential for a business. So you always want to have a cash flow, operational cash flow or working capital cash flow ready with you. And how do you analyze it? How do you study it? So you take in all the cash in, remove all the cash out, and then you get the net cash flow. You need to understand that cash flow is cash in essentially is not just simply revenues earned, or cash out is not just the expenses that you occurred that must have been incurred in the income statement. It can be much more than this as well, right? So what are the inflows and outflows sources? Where can you get money from and where do you spend money from? There's three types of activities. So there's operational activity, investment activity, and financial activity. You take in the cash inflow from all the three and you remove the cash outflow from all the three to get a cash pool. And the more and more this net cash flow is, the better it is for the company. The company is said to be really, really good as a fundamental investor if the cash flow is really nice. What are the operational activities? Stuff like direct sales, revenues that are there, any money from previous sales cycle or previous operational cycle, any commissions and royalties, all of that gives you cash inflow from operational activities. At the same time, if you are purchasing anything, if there's any payment to be made over the previous operational cycle, a direct operational cost, taxes, wages, manufacturing expenses are all operational cash outflows. For investment activities, if you investment activities usually refers to stuff related to the company. When you're putting in money back into your company, that's an investment activity. So any sale of fixed assets or investments is going to be a cash inflow, while a purchase of fixed assets or investment would be a cash outflow. You remember talking about the working capital cycle that we discussed? So because that is again money coming back to the company, any cash coming in is an investment cycle for working capital in is an investing activity, and a cash outflow if the money is going out. Finally, there's financing activity. So if you're raising money through debts or bonds or shares and you're getting that money, that's cash inflow through shares, debentures, and long-term borrowings, and outflow if there's any payment or a payment of dividend or interest or something like that. Finally comes the balance sheet of the company. So what is a balance sheet? A balance sheet is essentially trying to weigh in the assets and liabilities and equity. Why do you want these and the sum to be equal? So liabilities and equity, you need to understand that these are the sources from which your company can raise in money. If there's any loans, if there's any paychecks, any mortgages, all of them are liabilities and also sources from which your company can get money. Same is the case with shareholders' equity. However, if your company has some asset, let's say a property, a plant, and equipment, some cash lying in the bank, some inventory that's unfinished goods or something, all of that is an asset for you. Also, at the same time, this is where you can spend all your money in, right? So this is all the sources of money, and this is where you can spend your money. So naturally, both of them have to be equal. This is what a normal balance sheet usually looks like. You have got current and non-current assets. This is an accounting metric. Current is usually referred to things in shorter term, let's say 30 days, 100 days. One operating cycle keeps on differing from company to company. Non-current is long-term stuff. You've got current liabilities and long-term liabilities, and then you've got owner's equity. So yeah, while we've seen all of this, it seems pretty simple, and people often disregard this simplicity, I would say. So we're going to see an actual company's financial statement, and I'll try to show you guys how it really is this simple in nature for all the three statements. So here I'm on Google and I'm going to type in any company's name, right? Let's go with Maruti Suzuki, and we're going to try to find its annual report so that we can get the financial statements out of it. And because Maruti Suzuki is a publicly listed company, we should be getting all the information related to Maruti Suzuki easily available on the internet. We're going to go with 2019-20 annual reports, and there you have it. High resolution, low resolution. Okay, let's go with high resolution, right? And yeah, we've gotten Maruti Suzuki's annual report here. So this is how the entire annual report looks like. It's a 330-page report as far as I can see. And let's go into financial statements. That's 196. So page 196. Okay. And yeah, here we are, financial statements. So let's see what this is got. All right, this is auditor's report, annexures. And yeah, here we have balance sheet, profit and loss statement or income statement, and the cash flow statement. Let's see what the balance sheet looks like. Assets, equities, and liabilities, right? Yeah, they've got a non-current and current assets, they've got an equity, they've got a non-current liabilities and current liabilities, as we talked about, right? So you see, it's similar stuff. Non-current assets is PP&E, it's got capital work in progress and intangible assets. All of that was non-current assets for us, remember? If there's any current liabilities like inventories, there's investments to be made, all of it. There's equity, like we talked, and then there's long-term liabilities and current liabilities or short-term liabilities. It's mostly consisting of financial liabilities, as we can see here. Let's go to the profit and loss statement. So again, this is similar to what we've already seen in the slides. So it starts with revenues and other incomes. You take in the total income that you have, and then you keep on subtracting back expenses. So they've first, subtracted all the direct expenses like costs, purchase of stocks, change in inventories, employee expenses, financing, depreciation, and vehicles. All of that has been subtracted. They've gotten the profit before tax, like we mentioned. Then they remove the tax and they got the profit. After that has been done, other income has been added, and yeah, there's the entire profit and loss statement. Finally, there's cash flow statement. So you've got cash flow from operating activities, cash flow from investment activities, and cash flow from financing activities, like we mentioned. It's not really a lot of, it's not really a very complicated thing. You just have to go into this and just check it out. It's pretty easy stuff. It's the same thing that we kind of discussed. So yeah, hope this video was useful for you guys.